Crypto regulation doesn't matter, in my opinion. If it mattered, then, Bitcoin would be at, $2 or whatever. If the Democratic people's assault on Bitcoin or in the Biden administration, if you sort of believe that rhetoric, then Bitcoin should be much lower. Is it? No, because they printed a fuck ton of money and it went higher. So regulation doesn't matter. If Bitcoin trades on, TradFi regulations, I don't want to own it. I want something that's immune to regulations. That it doesn't matter what the politicians do. The Satoshi has created such a perfect game of economic incentives that we will survive regardless. If you don't believe that, then sell everything in your portfolio, because what are you doing? Just go buy a fucking stock. I've put $1 million Bitcoin out there. I hope it hits $1 million, but maybe it's like 666,000 or 500,000 or 250,000 or some round number that the human mind is significant for some arbitrary reason.
Yeah,
we're gonna hit that level, and then we're gonna expect insane things out of the pace of fiat money creation. And at that point, it's probably time to sell everything. Now, I don't know where everything else is going to be. Solana, ETH, random fucking shitcoin in your portfolio.
Prepare for a bold prediction that could completely alter your view on Bitcoin. What if Bitcoin is on track to shatter its all-time highs, even before the Fed makes a move? It may sound unbelievable, but history shows that Bitcoin's price surges are driven as much by psychology as by economics. Traders often gravitate toward round numbers, not because they have any inherent significance, but because they evoke a powerful psychological response. Milestones like 666,000 or 500,000 act as magnets, pulling the market to euphoric levels. Arthur Hayes, former CEO of BitMEX, believes Bitcoin is headed straight for one of these key thresholds. And here's the kicker. It could happen while the US dollar buckles under the strain of aggressive monetary policies. When the fiat system faces its inevitable crisis, Bitcoin's rise could seem like a mere preview, but this could also signal the ultimate exit point. As liquidity dries up, expect everything from altcoins to speculative assets to be swept away. The real challenge for investors now is to recognize the moment to exit before the market frenzy takes over. With recent developments in the crypto space, Bitcoin may defy the Fed's expectations. However, if you're not careful, you might find yourself stuck holding the bag when the music stops. The next market crisis could be more than just about survival. It might be about whether you saw this coming. Watch highlights from Arthur Hayes' explosive interview to dive deeper into this. Don't forget to like, subscribe, and turn on notifications for more in-depth analysis. Thanks for tuning in.
So I think that the 4-year Bitcoin halving cycle and sort of the minor profitability and how that swings over time made a lot more sense in terms of a market cycle when Bitcoin was a much smaller asset class, and I guess in crypto in general, because if Bitcoin goes, everything else follows. But now that Bitcoin and crypto are a bona fide asset class, they're talked about in every major financial network in the world. Every central bank has an opinion on it, whether it's good or whether it's bad. You have the leader of the empire of the US talking about Bitcoin and policies, and everybody's responding with that sort of stuff. So now I think Bitcoin has transitioned from this sort of technological digital bear asset into the best smoke alarm for fiat liquidity that we have globally. Previously, that role was held by gold.
Yeah,
gold and Bitcoin have some different properties that make them react a little bit differently to things. And now I think we have a 24/7 market. Anyone with an internet connection can access it. And it's really just driven on fiat liquidity. So as I've broken it down in my essays before, I break down Bitcoin's price value as, on one hand, it's technology. On the other hand, it's fiat liquidity. And so in the beginning of Bitcoin, there's a lot more technological change as sort of the ecosystem was building and sort of technological developments were much more rapid. These days, the amount of change that happens at Bitcoin core is quite small. And obviously it takes a long time for the community to coalesce around how they want to change things. So the technology piece is pretty standard. There's a number of wallets that are getting added to the network at some rate over time. It's not anything magical or crazy. And so you can kind of forget about the technology piece. It works. And so whatever. It's really about fiat liquidity. How many dollars, euros, yen, yuan are being created and destroyed? And that's going to make its way into what we think the price of Bitcoin should be right now and into the near future. And so that's why I focus entirely on liquidity. All I care about is fiat liquidity. And yes, the stock market and Bitcoin can move, in tandem or not in tandem because of these conditions, but stocks have other things that decide the value, specific companies, earnings multiples, all these other things, right? Bitcoin, we have none of that. As long as we believe it works, then it just comes down to how many fiat things are in the denominator, and then you just get to the price. So I think, post the Trump victory, Bitcoin obviously had a stellar rise from 70 to 110,000. People expected all these great things. And I think a lot of it is, we're going to have all this money printing and all these sorts of things are going to happen. And I think the pace of credit creation disappointed expectations. And that's why we had this pullback from 110,000 to we got to a low of like 76,000 last 2 weeks, whenever it was.
Yep.
And I just put out a tweet earlier today. I've been doing some analysis over the weekend and listening to various folks. I think, obviously the United States is the most important barometer of credit creation globally. Everyone else sort of reacts to what's happening in the US. Yep. And I think there's a seminal change in the tone of Powell at the last Fed board meeting where, prior to this, he was pretty antagonistic towards Trump. I'm staying, I'm independent, inflation, we're going to fight it. Don't fucking talk to me about interest rates. I'm gonna do my own thing, right? Yeah. I'm here to solve inflation. Shut the up, Trump. Like, I don't care about your policy goals. Then in this press conference, there's a complete change of tone. Number one, they are going to decrease the pace of quantitative tightening, meaning they're going to let less Treasury securities roll off their balance sheet, which is a bit curious because number one, inflation is still above their target. So core PCE is the inflation targeting. I think it's a bullshit metric, but whatever. It's the one that they look at. It's above 2%. Stocks are at all-time highs. Maybe they're 4 or 5% off the all-time high, but still all-time highs. Unemployment, all-time lows. Real GDP growth, stellar in the United States. And the balance sheet is up over $3 trillion from COVID. And the whole point was, let's remove this credit from the system to stifle inflation to help the average American. And yet at this press conference, when the American economy is on, in all sort of ways you can look at it, doing very well, saying, I need to reduce the pace of removing the thing from the system that's caused all this harm to the average American. That's a bit strange. And then he went on to say, we think that possibly we could allow our mortgage-backed security runoff, which is about $35 billion a month, to be negated by buying $35 billion a month of treasuries in the near future, right? So that's, MBS QT, US Treasury quantitative easing, because you're effectively buying treasuries with printed money. That's very positive for dollar liquidity.
Bitcoin has emerged as the market's most sensitive indicator of liquidity. The slowdown in the Fed's quantitative tightening, QT, and the Treasury's pivot highlight an unspoken easing bias, exactly the type of environment where crypto thrives. As Arthur Hayes points out, Bitcoin's resilience amidst regulatory challenges demonstrates its macroeconomic strength. With Powell downplaying concerns over tariff-driven inflation and institutional adoption ramping up, the current setup mirrors past liquidity-fueled rallies. Now, technical indicators are aligning with macro trends, suggesting that Bitcoin is ready to break higher. When the Fed's true policy direction becomes clear, Bitcoin won't wait for official announcements. It will already be pricing them in. The QT slowdown and Treasury shift signal sustained liquidity support, setting the stage for Bitcoin's rise. Market behavior confirms that Bitcoin is transitioning into a pure liquidity asset, increasingly indifferent to regulation and more responsive to macroeconomic flows. With the Fed downplaying tariff risks and institutions continuing to accumulate, the conditions are ripe for continued strength in crypto. As Arthur Hayes notes, Bitcoin now serves as the most sensitive gauge of real financial conditions, poised to move ahead of official policy shifts. Let's dive deeper by watching more clips from the interview.
In the future, we haven't decided when yet. He was teasing this, telling the market what they plan to do, almost like a trial balloon to see what the reaction would be. Hey, guys, we might taper QT to be flat. So the Fed's balance sheet will be stagnant, but we'll, on one hand, we'll be allowing $35 billion of mortgage-backed securities to roll off our balance sheet. But instead of that $35 billion just reducing the size of our balance sheet, we're going to take that money and we're going to go in the treasury market and buy treasuries. and keep the yields low to help help Trump, which is very stimulative for financial conditions globally.
Totally missed that
He didn't
part.
he didn't say this is definitely going to happen, but when the Fed teases something, usually it's going to happen in the near future. They teased QT being reduced. I think in the December meeting, when you looked at the minutes, there was like, hey, there was votes or governors saying, hey, we think that the pace of QT should be tapered sometime in this year. And you had the big banks arguing for it in the latest quarterly refunding announcement saying, we believe that QT should be ended, quantitative easing should begin. And now you have Powell saying, hey, we want to help the Treasury market, but we're still not going to be, we still can't call it QE because that's bad publicity. It's still balance sheet constant, but it's kind of a QT twist. On one hand, we'll allow MBS to go down, but on the other hand, we'll buy some Treasuries. So he said that. And then finally on this tariff piece, because everyone is just freaking out about tariffs. What's Trump going to do on tariffs? Is it going to be reciprocal tariffs or a 20% tariff on everyone? He said, we believe that the inflationary aspects of tariffs are transitory, which basically means, let's say that Trump goes full retard, 50% tariffs or some ridiculous number, and that causes domestic inflation in the US as prices rise. Powell says, no, that's not inflation. We can still continue to ease conditions because we believe that is a transitory effect. That is not a long-lasting measure of inflation, and therefore we are within our mandate to continue to ease monetary conditions. So tariffs don't matter anymore to Powell, and they shouldn't matter anymore as crypto investors. If Trump does 50% or he does 2%, it doesn't matter because we know that Powell's going to continue to provide the monetary conditions, the easy monetary conditions that we need to have our portfolios go up in value in fiat dollar terms. So those three things, as I sort of thought about it and listened to some other commentators, may be extremely bullish on the new trajectory of crypto. And I think that on balance, we probably hit a bottom of 76,000. Does that mean that we're not going to retest it? No, of course not. But if I had to make a bet, I would bet that we go higher rather than lower. Even the US Bitcoin Strategic Reserve, what is it? I have confiscated some Bitcoin from people and I'm not going to sell it. That's what it is. And it's a lot of Bitcoin, don't get me wrong, but that is what it is. It is not, I'm going to print money and buy Bitcoin, which is what everyone wants to happen. I don't think that's politically palatable in the United States. It's not politically palatable in any country, to be honest. I think a central banker, if they're going to buy an asset, they're going to buy gold because they intrinsically understand what gold is. As recent as 1971, it was the standard globally. The dollar was on a gold standard for other central banks. And so that's what they're going to buy. And they have been buying it en masse since 2008. They've accelerated since February 2022 when the US and EU stole Russia's money. And so that is what central bankers are buying. They're not buying Bitcoin. There is no way that a politician is going to stand up and say, I'm going to print money and I'm going to buy Bitcoin. That is not happening. So I think people need to adjust their expectations on what these strategic reserves mean. It's kind of like when a boring company starts throwing out buzzwords of all these product lines are going to need to get their stock price to pop. Companies want to be seen to be technologically forward, to be innovating, and so they're going to say these nice things. Oh, we're going to put a Bitcoin strategic, or we're evaluating, or we're this, or we're that. But are they going to go to their people and say, I'm going to print money, I'm going to increase the fiat supply so we can buy some Bitcoin, so the Bitcoin bro can go to Space Club in Miami and buy tables? Like, it's just not happening. So I think people need to get their expectations right. No, I think it's people in crypto don't understand how politics works. So, there's a political process and how people do things in the United States, whether you like it or you don't, and they're following in that process. There'll be bills, there'll be lobbyists, there'll be consultations, there'll be working groups and this and that, and the luminaries or whoever those people are will get to meet the people in charge and talk to them about what they want, and they'll come up with this massive bill. And maybe it'll be good, maybe it'll be bad, I don't know. And that'll be the state of the play, right? Is it going to be some like massive step change where they're just going to make you rich just because I don't know why? No. And I think that's just people don't understand how politics works and they have these sort of inflated expectations about what's going to happen. So the intent is we want to have a more Bitcoin or crypto positive policy. The execution, the details are obviously very important because what's in your portfolio depends on the details, not the intent. People got the intent, it went from 70 to 110,000, and they kept thinking what the intent was the policy. And they were rudely awakened that the intent is not the policy. Policy is still being written. And it might not be as bullish for whatever you own in your portfolio as the intent of what someone said on the political speaking circuit was. It's not that they're lying to you. It's, I would like to do this. Okay, but the reality is they have to make concessions here and there and everywhere. Crypto regulation doesn't matter, in my opinion. If it mattered, then Bitcoin would be at $2 or whatever. If the Democratic people's assault on Bitcoin or in the Biden administration, if you sort of believe that rhetoric, then Bitcoin should be much lower. Is it? No, because they printed a fuck ton of money and it went higher. So regulation doesn't matter. If Bitcoin trades on TradFi regulations, I don't want to own it. I want something that's immune to regulations. That it doesn't matter what the politicians do. The Satoshi has created such a perfect game of economic incentives that we will survive regardless. If you don't believe that, then sell everything in your portfolio, because what are you doing? Just go buy a fucking stock.
The crypto market may be underestimating just how quickly Bitcoin could reclaim and exceed its all-time highs, with analysts now predicting a possible $123,000 target by June. This bullish outlook aligns with Arthur Hayes' long-standing belief that Bitcoin thrives in periods of expanding liquidity, which is exactly the environment we're seeing it unfold. As Real Vision analyst Jamie Coots points out, Bitcoin's price action seems detached from short-term regulatory concerns or tariff impacts, instead closely following macro liquidity indicators such as the weakening US dollar and easing financial conditions. The recent liquidity injections by the People's Bank of China and the Fed's subtle dovish shift, slowing quantitative tightening while redirecting MBS proceeds into Treasury purchases, are creating the ideal conditions for Bitcoin's next rally. Bitcoin has evolved into the most direct measure of global liquidity, and market behavior confirms this trend. Despite recent volatility driven by Trump's tariffs and recession fears, Bitcoin's underlying strength signals that institutions are accumulating in anticipation of further easing. BlackRock's Robbie Mitchnick echoed this, suggesting Bitcoin could perform well in a recessionary environment as a hedge against policy responses. However, not all signs are bullish. CryptoQuant's Bull Score Index is at its lowest since January 2023, suggesting some near-term consolidation before a major breakout. Still, history suggests Bitcoin often leads liquidity shifts, meaning new highs could come before the Fed officially pivots. With more states adopting Bitcoin reserves and regulatory pressure easing, the structural backdrop is growing more favorable. As Hayes would argue, when liquidity flows, Bitcoin rises. The key question is whether the market fully grasps how soon this could happen. As Bitcoin becomes the ultimate liquidity indicator, do you think it's on track to break its all-time highs soon, especially with a potential Fed policy shift? Let us know in the comments below. Share the video and don't forget to like and subscribe.